The world in which we live is pretty changing. According to Ray Dalio, when a large amount of money and credit is created, having more money does not equal more wealth or buying power.
Additionally, he said that when an individual, institution, country, or empire loses its buying power, it collapses. The billionaire investor is worried about the federal government's capacity to sell bonds with negative real yields and buyers' portfolio already highly weighted toward U.S. assets. He said that it resulted in asset bubbles, increased inflation, and currency depreciation. However, this is what he has to say about avoiding hyperinflation. If you are new to our YouTube channel, please subscribe and click the notification bell to avoid missing new content. Dinero Association will regularly add videos to keep you posted on the latest business and finance updates. Here's how you should prepare for hyperinflation. Ray Dalio. Before we get into the critical principles of preparing for hyperinflation, let's get to know Ray Dalio. Ray Dalio started Bridgewater Associates, now the world's largest hedge fund. He is renowned for his macroeconomic expertise and for creating the concept of risk parity investment. Dalio has long been famous for his conviction that there are better assets to hold than cash in the face of central bank money creation. Hyperinflation occurs when the monthly prices of products and services increase by more than 50%. The worst-case scenario is galloping inflation, which raises 10% or more each year. Hyperinflation is caused by two main things: an increase in the money supply and a rise in demand pull inflation. You can have shortages if people keep things, making it even worse. This is not a video to miss if you're worried about market volatility or a full-blown financial crash. Ray Dalio is at top of his field both inside and beyond the investment world, with unmatched opinions on the stock market, stocks, bonds, cash, and gold. Determine how far your savings will go. If you want to grow wealth, it's critical to understand where your money is going. Calculating your savings rate is a simple technique to determine how much your income may accumulate to wealth. It represents how much money is left over after expenses. Dalio recommends sifting through your savings and determining how much money you'll need to be safe and free. He also recommends calculating how many months or years you can live, depending on your current savings and what it would cost to maintain your lifestyle. It's important to realize that you don't need a world of luxury to meet your basic needs. Additionally, to be cautious after estimating your funds, make sure to cut into two, because taxes, inflation, and potential portfolio losses may all add up to more than half of the value of your investment. After you've set aside the portion of your portfolio that makes you feel secure, Dalio suggests that you consider how to put the remainder of your money to work for you by investing any money that isn't covered by your expenses. Diversify your investments. Diversifying your investments by owning assets that will perform well in either a rising or decreasing growth or inflation environment, and holding foreign and local asset classes works best. Diversification does not increase investment returns. Investing in a limited number of assets may beat investing in a broad portfolio. Diversification also reduces investment risk. We diversify our investments across businesses and asset types that do not share risks. This scenario occurs when assets perform differently in similar markets. Bond rates generally fall as stocks rise. Professionals say stocks and bonds are inversely related. Bond yields tend to move in the same direction, while stocks frequently move far more volatility, gaining or losing much more than bonds. Dalio recommended that diversification include holding assets that perform well in either a rising or falling growth or inflation environment and a mix of international and domestic asset classes. He has also advised against buying cash or government bonds at the moment, citing fears about currency depreciation. Cash, he asserts, is not a viable investment since it would surely lose 2% to 3% every year, if not more, owing to inflation. Dalio believes gold is a more enticing asset. a stance he also voiced in January this year.
Many investors, most notable billionaire Warren Buffett, see gold as a relatively safe and predictable investment during times of crisis. Don't try to time the market. Lastly, Ray Dalio warned that you should never try to time the market. Dalio has said that most people make the mistake of evaluating what will be reasonable based on what has been outstanding lately, namely how the stock market has performed recently and when the optimal time to buy. He stated that even professionals cannot always accurately time the market, and the average person would find it challenging. Non-professional investors would be better off making the long-term investments in a diverse portfolio that eventually pays off. Otherwise, all investors should be informed of the historical cycles and patterns of the economy and stock market. From booms to crashes and vice versa, Dalio has always maintained that economic cycles repeat themselves and that investors must learn. This is because a bear market may be the perfect opportunity to buy certain stocks at a discount. It is mounting evidence that even the most skilled specialists cannot outperform the market continually. There are investing techniques that do not need flawless market timing, but provide impressive profits regardless of the time. You earn money by purchasing stocks at a discount and selling them at a premium, which means you must determine when to buy and sell. This is one of the most straightforward obstacles to overcome in active management, yet it is virtually always missed. Hyperinflation is real, and we're not even close to it. Venezuela and Zimbabwe have had 4- and 5-digit inflation rates for years, and people are freaking out about single-digit increases for a couple of months. Please share and like this content and let us know what you think by typing your comments below. Keep your notifications open and I'll see you on our next video.